Welcome to the Ontario Mortgage and Real Estate Insights podcast, your go-to source for the latest developments, trends, and regulatory changes in the industry. I'm your host, Steve Hamoan, here to provide you with insights sourced from reputable news outlets to help you stay informed and make well-informed decisions. This podcast is brought to you by Real Approved Inc., a trusted mortgage brokerage dedicated to helping Canadians achieve their homeownership dreams. Visit realapproved.ca to learn more about how our experienced team can assist you with your mortgage needs. Let's dive into today's episode. Today, we're diving into some pressing concerns raised by Canada's financial regulator, the Office of the Superintendent of Financial Institutions, or OSFI, about the potential for significant mortgage payment shocks as renewal dates approach. OSFI's annual risk outlook has highlighted that more than one-third of Canadian mortgages will need to be renewed by the end of 2026. That's right, Steve. And while the Bank of Canada has lowered interest rates by 200 basis points since June 2024, many homeowners are still facing the reality of much higher payments compared to their original mortgage rates. It's a tough situation for many families. Absolutely, Janine. Borrowers with fixed-rate mortgages and those with fixed payment variable-rate mortgages are particularly at risk. They initially benefited from historically low interest rates, but as these renew, they could see sharp increases in their monthly payments. Equifax Canada supports this concern, noting that 6% of Canadians who renewed their mortgages in 2024 experienced monthly payment increases of $500 or more. In Ontario and British Columbia, the impact was even greater, with about 10% of borrowers facing such hikes. And it's not just about increased payments. Mortgage defaults have been climbing as well, with balances past due rising 43% year over year by the end of 2024. This is a significant jump, even though delinquency rates are still below pre-pandemic levels. Indeed, regions with high property values and mortgage debt, like the Greater Toronto Area and Greater Vancouver Area, are expected to feel the stress even more. Plus, there is an oversupply in the condominium market, which is adding to the uncertainty. OSFI is also concerned about potential U.S. trade protectionism and rising unemployment rates, which could exacerbate the financial strain on borrowers. These economic changes might lead to more vulnerable market segments struggling to service their mortgage debts. To mitigate these risks, OSFI has ramped up its monitoring of mortgage lending practices. They're using advanced analytics and a robust examination framework to ensure lenders adhere to prudent underwriting standards. One of their key measures has been enforcing loan-to-income limits for uninsured mortgages, capping the portion of lenders' portfolios that can exceed 4.5 times the borrower's income. This is aimed at preventing excessive household leverage. Moreover, OSFI has made adjustments to its policy around mortgage renewals. Now, borrowers with uninsured mortgages don't need to meet the minimum qualifying rate when switching lenders for a straight renewal. This move provides more flexibility and helps borrowers secure competitive renewal terms without added qualification hurdles. Beyond the real estate sector, OSFI also highlighted other risks to Canada's financial stability, like increased cybersecurity threats and geopolitical tensions. They're emphasizing the importance of being watchful over wholesale credit risks due to economic uncertainty and potential market volatility. Steve, let's shift our focus to British Columbia, where the BC Financial Services Authority, or BCFSA, has uncovered some significant violations within the mortgage brokering industry. This comes after a multi-year investigation into unregistered mortgage broker activity involving J. Kanth Chaudhary.
Janine. Yes, Steve. It's quite concerning to hear about these unauthorized activities. The investigation revealed that several individuals were involved in professional misconduct by participating in an unauthorized mortgage brokering scheme. This kind of behavior undermines trust in the financial system, which is crucial for both consumers and professionals.
Steve. That's exactly right, Janine. The BCFSA has issued 5 consent orders as a result of this investigation, pursuing disciplinary actions against those involved. Among the 25 individuals investigated, 23 have been charged, including 4 real estate licensees and 1 mortgage broker. These actions include monetary penalties and license cancellations.
Janine, the penalties are quite severe, reflecting the seriousness of the violations. For instance, Afsane Zarshanis has been ordered to pay a $50,000 disciplinary penalty and must complete a remedial education course before regaining licensure. Others, like Melania Golshani and Homayun Karimlu, have had their licenses canceled and face hefty fines.
Steve, and it's not just about fines and cancellations. The BCFSA is committed to safeguarding consumers by enhancing transparency in its regulatory actions. They've even released a consumer fact sheet to help consumers verify mortgage brokers' credentials and avoid potential fraud and financial loss.
Janine, it's a good reminder for consumers to always work with registered professionals. The BCFSA's efforts to disclose previously redacted third-party information underlines their commitment to transparency and consumer protection. These steps are essential in maintaining the integrity of the financial services industry.
Steve, absolutely, Janine. It's crucial for consumers to be vigilant and informed, especially in such a significant financial commitment as a mortgage. The BCFSA's actions serve as a strong reminder of the importance of compliance and ethical behavior in the industry. It's a clear message that misconduct will not be tolerated. Steve, let's pivot to the latest update on Canadian home sales, which have seen their largest drop in nearly 3 years. According to the Canadian Real Estate Association, sales fell by 9.8% in February compared to January. That's quite a significant decline, Janine.
Janine, it is indeed, Steve. The uncertain economic outlook, largely due to the onset of a trade war, seems to be a major factor keeping potential buyers hesitant. When faced with such uncertainty, it's understandable that people might delay making big financial commitments like buying a home.
Steve, James Mabey, chair of the Canadian Real Estate Association, mentioned that the uncertainty over the last few weeks has caused some buyers to think twice about their decisions. This hesitation is impacting the market significantly.
Janine, and it's not just the sales volume that's affected. The home price index has edged down by 0.8% on the month and 1% annually, while the national average selling price is down 3.3% from last year.
Steve, that's right, Janine. The Organization for Economic Cooperation and Development has forecasted that the tariff hikes from the United States will drag down growth in North America while driving up inflation. This economic backdrop is certainly influencing buyer behavior.
Janine, it's a challenging situation for both buyers and sellers. The Canadian Mortgage and Housing Corporation also reported that housing starts fell by 4% in February, which contrasts with economists' expectations for an increase. This adds another layer of complexity to the housing market scenario.
Steve, indeed, Janine. Economists had expected housing starts to rise to 250,000 units, but instead, they came in at a seasonally adjusted annualized rate of 229,030 units. This indicates a slowdown that could have broader implications for the housing sector and the economy.
Janine, for those in the market, it's crucial to stay informed and consider all these factors carefully. It's times like these that working with knowledgeable professionals can make a significant difference in navigating the uncertainties of the housing market.
Steve, let's discuss the recent figures released by the Canada Mortgage and Housing Corporation, or CMHC, regarding the slowdown in housing starts for February. The data shows a 4% decline in the annual pace of housing starts, with the seasonally adjusted annual rate coming in at 229,030 units. This marks a decrease from the 239,322 units recorded in January.
Janine, that's a noticeable drop, Steve. It seems the market is facing some challenges, particularly in the single detached homes category, where starts fell by 1% to 56,273 units. While it might not seem like a huge decline, it does indicate a cooling trend that could affect both buyers and builders alike.
Steve, Indeed, Janine, the rate for all other housing starts dropped by an even more significant 5%, hitting 172,759 in February compared to January's numbers. This broader decline across the housing sector could be a reflection of the economic uncertainties we're seeing, possibly influenced by external factors like trade tensions.
Janine. And when we look at cities with populations of 10,000 or more, the pace of housing starts fell by 5% to 209,784 units. This urban slowdown might suggest that even in more populated areas, there's a hesitancy to initiate new projects. It makes me wonder about the impact on local economies and construction jobs.
Steve, that's a valid point, Janine. The rural areas, on the other hand, saw an estimated 19,246 units for February. While the rural numbers are smaller, they still play a crucial role in the overall housing landscape. It's interesting to note that despite the monthly drop, the 6-month moving average for housing starts actually rose by 1.1% from January, reaching 239,382. This could suggest a bit of resilience in the longer-term outlook.
Janine? Yes. Steve, the 6-month moving average does offer a glimmer of hope. It's essential for those involved in the housing market to keep an eye on these trends and not just the month-to-month fluctuations. The longer-term data might provide a more stable picture, helping to guide future investments and planning.
Steve, absolutely, Janine. As always, staying informed and understanding the nuances of these statistics is critical for anyone involved in the real estate market. It helps in making strategic decisions, especially in times of economic uncertainty. Steve, today we're discussing a significant real estate transaction in Hamilton, Ontario, where a home recently sold for a substantial loss. It's a striking example of the current challenges in the housing market. This property, located at 148 Leinster Avenue North, was sold last week for $440,000, which is a $240,000 loss from its peak sale price of $680,000 in February 2022.
Janine, that's quite a loss, Steve. It's a reflection of the broader market conditions where home prices have been declining since they peaked in the first half of 2022. Even though experts are predicting a potential upswing this spring, the impact of U.S. tariffs could pose further challenges.
Steve, indeed, Janine. The home had been bought by investors in 2022 at those high prices and was leased out, but things didn't go as planned. The mortgage lender, Talca Credit Union, eventually took over the property after winning a $534,000 judgment against the investors. It's a clear case of how market dynamics can shift rapidly, affecting investment strategies.
Janine, it's a tough situation for those investors, and it highlights the risks involved in real estate investments, especially during volatile times. The property itself is a 3-bedroom, 1.5-story home with some updates, but it might need further renovations. It's located near the Hamilton Stadium, which is typically a desirable area, but even location couldn't mitigate the financial loss in this case.
Steve. Right, Janine. According to real estate records, this home has seen quite a price journey over the years. It sold for $73,000 in 2002, $340,100 in 2019, and then jumped to $425,000 in 2020 before hitting $680,000 in 2022. However, by December 2024, House Sigma valued the home at $461,500, indicating the downward trend in property values.
Janine, it's a reminder that while real estate can be a lucrative investment, it also comes with its share of risks. Market fluctuations, economic factors, and unforeseen events like changes in trade policies can all play a significant role. It's important for investors and homeowners alike to stay informed and consider these elements when making decisions.
Steve. Absolutely, Janine. This case in Hamilton is a stark example of how quickly market conditions can change and impact financial outcomes. For anyone involved in real estate, whether as a buyer, seller, or investor, understanding these dynamics is crucial. Steve Lutzibursings. Let's dive into this week's top stories that have been making waves in the real estate and mortgage landscape. One of the main headlines is the recent move by the Bank of Canada to cut its key policy rate by 0.25 points to 2.75%. This decision was made in an attempt to stimulate demand, but it seems to have had some unexpected consequences.
Janine, that's right, Steve. While many Canadians were hoping for cheaper mortgage rates, it turns out that only variable rate mortgages are directly impacted by this rate cut. Fixed rate mortgages, which are more popular due to their stability, are influenced by bond yields. Interestingly, these yields have risen following the rate cut as inflation expectations increased.
Steve, exactly, Janine. The central bank's intention was to stimulate the economy, but with the consumer price index approaching the upper bound of inflation tolerance, there's concern that the Bank of Canada might need to reverse course and hike rates sooner than anticipated. This situation underscores the complexity of balancing economic growth with inflation control.
Janine. Indeed, Steve. It's a delicate balance, and while the immediate effect might seem beneficial for some, in the long run, it could lead to higher borrowing costs if inflation continues to rise. It's crucial for homeowners and potential buyers to stay informed and consider how these fluctuations could impact their financial plans.
Steve, moving on, another significant development involves Canada's new Prime Minister, who is reportedly collaborating with Vancouver's condo king, Rob Rennie, on a plan to involve foreign investment in creating rental apartments. This initiative, using taxpayer resources to support foreign real estate investment, has sparked a lot of discussions.
Janine, yes, Steve. It's an ambitious plan that aims to address the high housing values that are making it difficult for domestic support. However, this move has its critics, who argue that relying on foreign investment could lead to other challenges, including potential impacts on housing affordability for Canadians.
Steve, that's a valid point, Janine. While foreign investment can bring in necessary capital and boost the housing supply, it's vital to ensure that such initiatives don't lead to unintended consequences that could exacerbate the affordability issues we're already facing.
Janine. Absolutely, Steve. It's a complex issue with multiple facets, and it's important for policymakers to weigh the potential benefits against the risks. Ensuring that the housing market remains accessible to Canadians should remain a priority.
Steve, as we wrap up today's discussion, it's clear that the real estate and mortgage landscape is continuously evolving, with each new development bringing its own set of challenges and opportunities. It's essential for everyone involved, from homeowners to investors, to stay informed and adaptable.
Janine, that's right, Steve. Keeping an eye on these trends and understanding the broader implications can help individuals make more informed decisions as they navigate the market.
Steve, thanks for tuning in to another episode of the Ontario Mortgage and Real Estate Insights podcast. We hope you found today's insights valuable as you navigate the world of mortgages and real estate.
Janine, before you go, a quick reminder, Real Approved is here to make your mortgage journey smoother. Whether you're buying your first home or refinancing, their experienced team is ready to guide you with personalized support every step of the way. Visit realapproved.ca to get started and take the next step toward achieving your home ownership goals. Catch you next time and stay informed with the latest industry insights.